Remember, please hit like and subscribe for me. Thank you so much. Okay, let's go. Hi, everyone. It's Friday, December the 26th, and this is the Moneyball Morning Report for the Benzinga Pro platform. We are taking a look at the E-mini S&P, charts by TrendSpider, and gamma lines and gamma flows by Menther Hugh. We've got a little bit of a fade this morning. You can see the pre-market action, the opening hourly candlestick. We are underneath it. And it is about, let's see how many, 79 to, it's about 11 points wide. So let's clone it for giggles and give us 11 points wide there. We get 69.68 potentially as a wick that could bring us back to a bounce zone. So that's my suspicion. If we do an old resistance, new support edge, we're going to come into the put wall, and that is 69.60. That's the 0 DTE put wall. Now remember, these put walls, particularly the 0 DTE ones, they can move quite rapidly. You don't want to look at these as lines in the sand, just areas of concern. The call wall remains 7,000 to the upside, and the put wall is 68.50. That also has not changed. As you can see, the 0 DTE call wall and 0 DTE put wall have changed. And that 0 DTE call wall right now at 69.85, that should move up to 6,900 easily. That should move up to 6,900, potentially 6,950 by the morning. The put wall for the 0 DTEs should stay at this 69.50, 69.60 area. We do see bullish formations. Dips are buy zones. Our momentum is clearly in an upside rotation. That gives us the same mechanical flow. What might we see tomorrow? We've got settlement for a number of bonds and the Fed balance sheet. So no big information to jolt the market other than general news. All right. And that could be anything. So far, we have deep support zones at 69.23 and 6,900. Right? Did I say 6,900 for the call wall 0 DT? Of course, that's not what I meant. 69.75, 69.90. It could easily rotate up to 7,000. I believe that is where the traders want to go. We are testing the anchored VWAP. So if you're staring down the trade right now, or very soon when this comes up, you could say, hey, I'm going to take a long right here and see if it can get back into the resistance zone for a few points, right? That's not a bad move. And if you have micros that you're using and you don't care about the drift down, you could leave it in there and let it rotate around until it comes back up. I would say just let the chart do its thing, right? Dips or buys, wait for it to resolve around this area. Things are always just a little bit trickier when you're underneath the VWAP, and we are clearly under the VWAP, so we got to pay attention to that. All right, let's get to the NQ. I do hope everyone had a nice holiday. Hopefully you're still on holiday and you're able to take it easy a little bit. Let's take a look at the NQ. We are looking at, trend lines are a little bit messy here. If we use this one way down here, we've got pullbacks into the value area. If we just use the trend lines that sit from that region, we are very close to where we should see a bounce. Anchored VWAP from Wednesday on the shortened trading schedule is 25,830. That could easily provide a bounce zone. We are underneath that first 30 minutes. The first 30-minute candlestick formation actually gives us the first hour of rotation. We don't get out of that until just a minute ago, and now we're trying to recover it. So that is pretty interesting. The loss of the level brings us down to old resistance, new support. That's 25,825. Right now we are battling at the 0 DTE call wall, and that number is 25,850. We're trying to stay above it at this juncture. Remember, the option sellers want us to be under that number. The 0 DTE put support line is 25,700, and the put wall, 24,500. That one might creep up over the next couple of days. That's very, very far away. Notice the congestion zones for key supply build and key demand build. These stripes right here tell us that there's a lot of buying pressure that's supportive in these areas down all the way into the put support level. Remember, the traders are going to want to stay inside of the pocket between 25,700 and 25,850 if they sold options and they want to win on the day. But I expect this 0 DTE call wall to level up, probably take over at the gamma level 2 at 25,900. And our call wall at 26,000 could be where we get to by, this time next week. Okay, dips or buys. Momentum doesn't look quite as strong on the 30-minute as it does on the hourly, and not quite as strong as the ES looks, right? The ES looks a little bit stronger. Let's draw a trend line. Now, the reason I don't trade trend lines, folks, is because they are arbitrary. They truly are, very arbitrary. And you can see that I can draw literally an infinite number of lines going through all of these wicks, right? And that gives us a pretty solid range to trade inside of, but we're in a dip buying zone. We've got solid momentum. Pullbacks are buy zones, and the best pullbacks are old resistance that turn into new support. And that's about 25,000, what is that, 800? Yeah, something like that. Okay, so be careful. Watch where inventory is accumulating. Notice we've got some pretty important levels of accumulation between 25,775 and 25,825. Those are going to give you some really nice areas. Let's see the heat map. Yeah, it should move from one area of the heat map, from the bottom of one area to the top. You can see it lifting, but it's really hands-off if it's under the VWAP, unless you're staring it down and you're saying, okay, this is my trade, right? You want everything lining up the right way for you. Okay, let's take a look at Bitcoin. Bitcoin had a nice bounce, right? I would say this has quite a bit to do with, one, just popping up through all these resistance zones. It's coming up into 90,000. It looks like a double top here in the overnight. If we breach it, we've got gamma level 4 at 91, and then gamma level 3 at 92,000. I think those are pretty good upside targets. There's a lot of volatility in here. My thought is that this is because this movement here has a lot to do with what is not happening in the carry trade, right? There's a lot of stuff happening that shouldn't be happening in this carry trade, and it is, and it's keeping liquidity in the market. Liquidity is going to drive Bitcoin to the north if it's available. And so that's what we're staring down, right? Call wall, 90,000, 0 DTE call wall, 89,000, 0 DTE put wall, 87,000, and the big put wall moved up from 75,000 to 85,000. So as you know, the way the people that are trading this particular option, I'm not trying to throw shade on anybody. I really am not. I'm just saying there's a limited level of sophistication sitting in the players of these options, and it is really showing by how they jump around. So I would take these walls with a grain of salt and look a little bit more at big picture formations. This big picture formation shows us a potential double top. How do you measure whether that double top is going to transform? You go from top to bottom. You measure the 50% line. That's 88,400 or so. If it bounces off of that area, it's very likely to move back to the top. If it fails that area, and it could be that it fails and then bounces and fails again, it's going to come to the value area low. That's around 87,000. I do not know what's going to happen here. I would suspect that if we recover up over the VWAP and in this range, we will continue to the north. Under the VWAP, buying the dip is always suspect, right? It just is what it is. All right, let's take a look at silver. I have to tell you that this silver contract has astounded me. It's astounded me, and it is one of the biggest squeezes I have literally. It's probably the biggest squeeze I've seen in 20 years. 20 years of staring down charts. It is absolutely monstrosity of a squeeze. So let's take a look. Look at what's happening now. It gapped up. It was 71.50 on Christmas night, and now it is up at 74.80. Look at the accumulation of inventory. This is pretty important. Right? Is it above the VWAP? Yes. Is it accumulating inventory above the VWAP? Yes. Is momentum high? Yes. Is trending motion in play? Yes. All of these things are telling us dips are going to be buy. So where could they come into the dip? I would look at the low volume node here. It sort of corresponds with the call walls. The 0 DT call wall in particular is 73, but this gap at $72.50, that's the one I think is really pretty important for us to stare down. If it can come into that zone, it'll be a great buy. Here's the thing. It really hasn't given us too much of a good buy in any of the spaces. But if you notice what happened yesterday, the rotation off of this low to high, literally the 50% area was $70.70. It broke it, came into the high volume node for this zone, and then recovered. And so when we hit that recovery space, that's where we can buy, nibble a little bit. When it gets on top of the VWAP, we're in much better shape. And when the VWAP is presenting itself as a support, we can continue to buy. Okay, that being said, let's assume that this new wave that I just drew, come on, Fred, is going to give us our next retrace. The wave is bigger. 50% level comes right down into that 7250 zone. So I would not be surprised if it came down into that region and then bounced. It'd give you a good shot. This is an unbelievable rally, and there are a lot of people that are off sides here that are short and having to buy to cover. The call wall has moved to 80. Now some people are calling silver up at 120. But you know, that always happens when something goes crazy, then everybody jumps on the bandwagon. All right, let's take a look at oil. So oil has been desperately trying to get out of the big pocket it's been in for many months. It's done a really good job breaking out over the last several days. Notice this steepness has moved out a lot more. This truly is a geopolitical bounce, concern that's causing this bounce, in my estimation. We know that a lot of commodity traders are short oil because of a perceived supply glut. Now, I've never seen oil traders argue with each other as much as they are arguing with each other right now across different platforms. Some are saying, hey, you're bonkers if you think it's a real glut. Other folks are saying you're bonkers if you think this is not a glut. So they are still positioned short. Now, here's why I'm telling you this. At some juncture, if these short traders that are banging the drum on, hey, oil is a short, oil is a short, oil is a short, there's just so much pain they can stand into the 60 area. If it gets above 60, there's going to be a problem. And they are going to wind the price up, and all of a sudden, like, we're going to start stepping out of the range, and we're going to hit 62, and then 65, and then, you know, whatever else is next, right? At this juncture, however, what we're trying to do is get to the top of the value high area, and that's $59.50. Dips are buys in the current structure. Look at all the accumulation here. What is the slope of this VWAP? It's flat. What is the slope of our dynamic cloud, this green thing here? Slightly up, right? Momentum caught in the mid zone. All of this looks very sideways. So what would you want to do? Buy the bottom, sell the top. If it's in the middle here, don't mess around. Just leave it alone. Why? Because in the middle, let's say you went long, your stop would have to be 40 cents wide, essentially, maybe 38 cents, but you could get wicked out like that. If you went if you went short, your stop would have to be that same 38, 40 cents wide. But if you wait until it gets to the top, you literally have 10 cents, 12 cents of risk. Or if you wait until it gets to the bottom, you get 12 cents of risk. Now, you might go, yeah, but what if it doesn't come back? Then wait for the next setup. Don't say, hey, I'm just taking the risk simply because I want to get in and I don't want this to run without me. That's not a valid strategy. A valid strategy is anchored around risk. And so you must take that into consideration. If you are saying, hey, Anne-Marie, being too conservative, what about me trading at 58.31 or, long at 58.31 or short at 58.58? Hey, whatever you want to do, right? I'm just suggesting what I would do given the circumstances, given the momentum, given the relative trend, and what the prices have been telling us the traders are doing. We have deep support at the put wall for the 0 DTEs. That's 57.50. The 0 DT call wall is $59. The put wall is 55. It has not moved. It has not moved. And boy, what a great long. What a great long from these dips here. I mean, absolutely fantastic long off of the dips for those folks who've been trading this overnight. The big price action that's a measured move event puts us another 60 cents upward. So, 59.40 would be that upward pressure event. It looks good, but I would wait for the dip. I would look for the wishing order because volume is going to be very light, right? Volume is going to be very light tomorrow. We should see something, a continuation of the Santa rally during the trading day on Friday and then potentially on Monday. And then, who knows what happens into the end of the year. But that's what we're going to do with oil. Let's take a look at gold. Gold continuing to track higher. Where is, wow, the big call wall at 4,550, no, 4,515 has not moved, and the 0 DTEs are sitting there as well. I expect this call wall to get shifted up. The one-day max is 4,578. Price action has gapped up, and if we take a look at the first 30-minute candlestick formation, we can see the traders are breaking out of that zone. It's a pretty nice range. So let's clone it and see what the top values look like. Well, looks like we almost came into it on the first measure. And so pullbacks into that VWAP. It's a flat VWAP though, right? But pullbacks into the VWAP around 4,538 could be a pretty nice buy zone. Where would I go? I want to see if it can get to this aggravated accumulation zone here where they gapped down or they wicked down and then held up. I would not mind seeing 45.25, 45.30 for the buy zone into that area for an upside pressure event. On the flip side, we can see that we still have a ton of momentum. Martin Armstrong has called 45.50 to potentially 46. I can't remember what that number is. It might be that 46.40 area. And so there's still a lot of upside pressure, but notice how these candlesticks are retracing each other, right? They're retracing each other, and yeah, that's certainly something to watch. Very, very messy price patterns. It could come all the way to 4,480 before it bounces again, or it just could continue to run up. What we do see is very thin volume. Okay, lastly, excuse me, that's me sneezing. Lastly, we're looking at the SPY, 690. For those of us in that butterfly into January, this one still looks pretty good, but I would take it off if it starts really running to the top of the range. A lot of things are really running very hot. They should be pulling back a little bit more in my mind, but this looks like some kind of first pass topping formation, but the pullbacks also easily buy zones. Strong upward trend, strong upward momentum. Notice the dip formations do come in They fill the gap. They come into the zones, except for the last 2 trading days, right? The day before Christmas Eve and then Christmas Eve. And now we are looking at a fair resistance zone, break up above $690 and $691 should push us up into 694 if price action continues to move up. Clearly upward trending, right? I mean, clear upward trending. Where do I like the best pullbacks? Old resistance. And that gives us $688.40. The 0 DTE put wall is at 686. 0 DTE call wall is at 690, right? Our 1-day max is 697. Vol IV is very, very low in the SPY chains and the SPX chains. That is a solid inclination of upside continuation. And so that's what we ought to look for. Okay? Dips or buys, watch the levels up, and you don't trust the trend. That's all we got to do. We just trust the trend and buy the dip, and we'll stay as long as that holds. The moment that shifts behavior, we've got ourselves another formation ahead. All right, everyone. The next time I see you, it'll be on Market Kickoff on Sunday night. Take care. Hope you have a good weekend, and trade small. Watch your risk. Take care, everybody. Bye.